Good afternoon, good evening. Hello, hello, hi everyone. How you all doing today? If you can see me okay, you can hear me all right, put it into the chat, let me know. Hey, Promise, how you doing? Hey, Gary. Hey, Given. Hope you're all well. You've been trading. Hope you're all good. Fantastic. Thanks for that, Moal. I'm very well. Been trading. Had a couple of good trades yesterday and today, so I'm very happy. Good start to the new year. Give it a couple of minutes before we get started. And what I like to do is also that as we wait for everyone else to stream in, put it into the chat. Let me know where you're joining me from. I love to find out. Good stuff. Which part of Australia, Promise? How's Scotland right now? Hey, Ibrahim, how you doing? Melbourne. I used to be from Perth. I spent about half my life, well, a long time, in Perth, WA, Western Australia. Would have guessed that Scotland would be cold. Today we are going through here with IronFX on the webinar series, the trading strategy clinic today. So if you do have, any questions at any point in time, trading related questions, please feel free to put it into the chat. Let me know. Hey, Ator, how are you doing? Good to see everyone here. I hope you've had a good Christmas, a good New Year's party. Excited and raring to go for the new year. Should we get started? Alrighty, let's get going. So again, welcome everyone. Thank you all for attending this session. Today we are here with IronFX on a webinar series, the trading strategy session, trading strategy clinic. So what we do here is that we will be looking for your questions. If you have any questions about your trading strategy, if you'd like to share with me your trading strategy, I'll be happy to give you my views, possibly try and help you tweak it a little bit to maybe get a little more profitable or get it more consistent. So if you have any questions, please feel free to put it into the chat and let me know. All right. With that as well, what I'll be doing is I will be sharing with you how I approach the market, what I look at, what I think about when I look at the news and the charts before getting into a trade. So I'll be sharing with you my thoughts and possibly some ideas about the markets as we go through the news and the charts. So as usual, before we get any further on, quick disclaimer, information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material is just a personal opinion of the author, myself, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. What it means is that I will be sharing with you, or might be sharing with you, some trade ideas, some possible trade setups that I'm looking at, I could be jumping into. If you do jump into any trades, please make sure you check it, make sure you do your own due diligence, make sure that it fits with your own trading strategy. Okay. And then what I will always suggest is test it out first, maybe on a demo account or on a smaller trade size. Once you gain more confidence, you understand the trade itself, then you could start looking into a possibly larger trade. One other thing is that because I will be looking at quite a number of charts and quite a number of trade ideas, please make sure you check your leverage, check your margin, right? You don't want to be jumping into all the trades because that will definitely lead you to over trading. And, through my experience coaching a lot of retail traders like yourselves, um, it's not so much a bad trading strategy or one or two bad trades that's going to cause you a lot of problems. It's the over trading that's going to cause the biggest problem. All right. So just bear that in mind. This session is being recorded. I do believe that it will be uploaded onto YouTube. I'm not sure when after, so immediately after or after a short delay, but it is being recorded. I do believe that it will be uploaded onto YouTube. So John just shared here, he does a breakout and a retest is my strategy. How can I get 80% accuracy? It's I was just actually helping a guy out with his trading strategy. He sent me his trade history, he sent me all the trades that he's just got into recently, and he had the same question as, how does he get his hit rate or his success rate higher? It's not so much about the accuracy. All right, accuracy is important, but it's not so much entirely about the accuracy, because you want to consider as well your risk to reward ratios as well. All right, because if you're looking at for example, a 1:1 risk to reward, then you need your accuracy to be a lot higher. If you're looking at a 1:2 or 1:3, or even at some level 1:4 risk to reward, then your trading accuracy could be a little bit lower. Not saying that we'll just jump into random trades, but your accuracy could be a little bit lower. But understanding that for the trade with a good risk to reward ratio, it's going to be, you're not going to have all your trades work out. Even, well, in general with trading, we know all trades are not going to work out, but one bad trade is going to be easily, or multiple bad trades is going to be easily covered by one good risk to reward trade. Okay, so try not to focus too much on just the accuracy alone. 80% is a very high rate to get it to. So it depends on how many trades you get into on average, what kind of risk to reward ratios you have. And then you start considering all that together with the success rate. Okay, John, so if you can, give me a bit more info, I'll give you more viewpoints from that. So another question there is, what do I mean by over trading? In terms of over trading, you want to make sure you want to calculate what's your capital amount, right? No, not calculate, but you want to understand that with your capital amount, what's the maximum trade exposure you should be having or you can have. Okay, so and also the number of trades you can have. So for example, based on a $10,000 account, right? What I would say generally on a $10,000 account, I would say your maximum trade size or your maximum trade exposure would be one standard lot, right? At a maximum, you say is one standard lot. And then if you find yourself entering or having an average exposure of 2 or possibly even 3 trades at a time, then because you have one standard lot, if you have on average about 2 trades at a time, you'd say that you shouldn't be entering at more than 0.5 or 5 minis at a time, because if you had 2 trades, it would be one standard lot. That would be the maximum amount. What I would normally suggest is to go even smaller than that, because you just never know when you might have that itchy finger and want to enter one more trade. So what I do tell a lot of my traders that I'm coaching, for example, if you have a $10,000 account, you could be your maximum trade size would be a one standard lot. I would say, hey, go smaller, right? I would say that even at that point, your maximum trade size should be at 0.5. Then you would have a 0.25 for the first trade, 0.25 for the second trade, and then 0.25 for the third trade, at least at that point, you still wouldn't be reaching your maximum trade exposure. Okay, that would be a very risk adverse approach to adopt, but we want to encourage the thought and the process that trading is for the long term. The trading journey is for the long term. I've seen a lot of people trade maximum size or twice as big as they should be just to try and go for that big returns, right? A lot of people have been talking about 20% returns or 50 to 75% returns in a month or in one trade. That's always possible, but you want to think about consistency rather than just that one trade or that 1 month of good results, right? So I would say, go for that 6% return in a sorry, pardon me. I would say go to the 4, 6, 8% return in a month, but aim to have your drawdown at a minimal, and then aim for that consistency with your trading rather than to try and go for that big trades. Okay, so over trading is understanding how many maximum trades you should have, and then what's your maximum trade exposure or maximum lot size exposure that you should have. Okay, I hope that makes sense to you, John. And then a question from Ruthik. Sorry if I'm mispronouncing your name. Question from Ruthik. What do you think are the two best indicators that work together? Okay, in terms of indicators, what I would say very quickly is that there are a lot of indicators out there. Actually, while I have that, I'll bring it up and just show you guys. Take that away. Okay, so I'll just put up a chart just to show you all the list of indicators that you can have. All right, bring up my layout. Where is it? All right, close that out. Okay, so you can have a lot of indicators. If you go into there, you get a whole list of them and even more as well. There's really no best indicator to work, but I like how Ruthik is asking about the two best indicators. So you're not talking about the one best one or the one indicator to have. It's good to have a combination of indicators, and you want to have it as different style or different types of indicators, right? So you want to have an oscillator together with, like, for example, a moving average, or you would use a stochastics together with the Fibonacci. You want to have a combination of indicators just so that it doesn't all give you the same idea. Say, for example, if I used a stochastic and an RSI, right? So we have the stochastics here, we have the RSI here. It's going to give you very similar indication. It's very good, right? Using the same word, but it's going to give you very similar indication. You can see here that if I move this line right across, the stochastics pushing towards upside, the RSI pushing towards upside, it's going to give you very similar indications, and you don't want that. You don't want that same thing because it's just telling you the same thing twice over. What you want to try and do is, for example, to have the stochastics and then also use, either the Bollinger Band or like the Ichimoku cloud in this case. We'll take some of these lines away just to make it a bit easier to see. Okay, so if you even just consider the cloud alone, it would make it a lot easier where you have the stochastics telling you that we could see some upside move. Sorry, my throat is terrible today. And then after that, you see the cloud, or you see price. Take that all away. Right, and then you see price breaking through the cloud or some upwards to the cloud, then you'll be looking for that upward potential. So you use a combination of indicators to give you a good all-rounded view, building that confluence. Now you have a confluence of indicators working together to give you that confidence on your trade. In terms of which are the two best indicators, I'll tell you that, as I said, no real best indicator, but what I use, I'll share with you the setup I have. For me, I have the MACD. All right, and also I have the Bollinger Bands. Right, so I have the MACD just to give me an idea of how crossover levels, or potential crossover levels, to see either the upside or the downside, and then the Bollinger Bands to tell me when it's outside of the band, we could see a retracement back in again. So I use a combination like that. I do look at support and resistance levels as well. So I have my approach. I look at the news first. Then after that, I look at the trend, support, resistance, and then the indicators. So just based on that, you can see that I actually place very little importance on the indicators. The way I trade, more on the news, the trend, and the support resistance levels, right? So more momentum trading with breakout. I think someone mentioned about breakouts there, and then with the trend following as well. All right, so I hope I answer your question there, Ruthik. Hey, Mohal. I'm learning trading and getting used to the jargon and all. There's a lot to learn, and I'm afraid of investing any real money. What advice would you give to a newbie to trading? There's a lot bombarding info on Forex, and I'm afraid of going into wrong directions via YouTube videos and schemes. Very good question there. I would say that good thing is that you're reading a lot, you're getting used to it, you're learning a lot. I would say that, test it out, right? Test it out. You can still check out, there are some good YouTube videos just to give you the information. Test it out. There's no harm in using a demo account just to test it out and to build that strategy, to build the confidence, and to get familiar with trading to start off with. All right. So what I usually suggest to newbies is that, read it up, read stuff, learn, but very quickly as you learn, apply it onto a demo account, right? Apply it onto a demo account, test it out, see how it works. One thing you don't want to do is to spend so much time reading but not testing it out. Then you end up, having too much information, like what you're probably facing, and then after that, still not knowing what to do or where to get started on. Okay, so read it, test it on a demo account, enter demo trades. Then after you build that confidence or some confidence, you start small. You get into a small trading account and then trade at a small lot size, at a minimum lot size, just so that you see how you behave when there's real money involved, when there is a real trade and real money involved, potential profits and losses. At that point, what you want to consider, or what you don't want to be considering, is how much money you're making. You want to stick to the process. Stick to the process, test out the process, test out the confidence. Then you slowly progress along to build your trading activity and your trading profile. Okay. Hope that answers your question there, Mohal. All right. Gary asked, can you show us how you use the cloud, the Ichimoku cloud? I'll get to that shortly. And where would you place stop loss and take profit? Okay, that's easy. I'll get to that. Ruthik asks, where do we get these news about Forex from? Any particular place where we get news that help us with trades? Okay, that one's easy, so I'll answer that straight away. For me, on my screen, whenever I'm sitting in front of the computer, whenever I'm trading, first, there are two things that I will have open. I'll have my MT4 open, and also I have Forex Factory open. Okay, so I'll share with you guys the link here. Right, so Forex Factory is where I head towards to get all my news. This fantastic thing is that it's free to join. You don't have to pay for anything. You don't have to pay for the news. It gives you the exact timing of the news release, which currency pair it affects, what news it is, the importance level, the previous data, the forecasted, and the actual data as it gets released. So very good site to use to get your information regarding fundamental news, regarding the news on the Forex markets. All right. Fantastic. I see a thumbs flying up. So good stuff. Okay, so to Gary's question about the cloud, let me just bring that back up. I'll clear out this once so it's not so messy. Okay, so see, the simplest or the most straightforward way I would do about use the cloud, I'll clear out some of these lines because there's a bit too much information there. The most straightforward way you can approach this is that you can see the clouds. Right, I'm trying to find a bit of a mix. Okay, you can see the red cloud there or the pinkish cloud there. It provides that indication, red or pinkish, for that downside move, and also it acts as a bit of a resistance level. Right, acts as a bit of a resistance level. So you can see that as price goes up, showing you further, still trading below the cloud. You're still looking at further downside with the cloud being reddish. You still say that it's trading below the cloud. So I'm still looking for some downside move with it being red. Looking at it on the H1 time frame, you can see that this one, for example, here, it's broke through the cloud. All right, it broke through the cloud. Despite it being red, we say that it's traded above the cloud. It's traded above the cloud. Now, instead of it being a resistance level, it's forming as a support level. All right, it's forming as a support level. You can see it came down, came very close to support, bounced back up again, came down very close to support, and then started being green. So now we're looking for upward moves as price trades out of that cloud. When it's in the cloud, whether it's red or green, we'd say that price is in the cloud. The direction of the move will be a little bit more varied, right? Be a bit more varied or choppy. So you want to wait for price to either break towards the downside or break up above the cloud before you start looking for that potential trade. Okay, hope I answered your question there. Short and sharp there for you, Gary. And then in terms of where would I place my stop loss and take profit, let's look at not the dollar index, but the Aussie dollar here. Okay. The way I would look at my stop loss and take profits, I would say that I always have my support and resistance levels done up first. Okay, so resistance level because it's tested, came down, support level because it's tested and bounced back up. So the easiest way to think about it is that your stop loss should be beyond. Okay, so your stop loss should be beyond the resistance. Let me put this as a resistance level and this one as a support level. Okay, so your stop loss should always be beyond the resistance. Okay, or beyond the support level. Naturally, if you're looking to sell it down, say for example at this point, your stop loss will be beyond the resistance, and then your take profit will be before the support. So your take profit will be before the support here. or even before the resistance level here. This is if you were looking to buy it up. So buying, take profit. This will be your selling, take profit. Okay. So as an example, if we're looking at this point here, anticipating that price could trade lower, we'd say that if we're looking to sell at this point, stop loss will be up here above the resistance level. Could be about 65 pips, 70 pips. Take profit will be before the support level at about this point here, about 160 pips towards the downside. You'll be looking at a 1:2.4 risk reward ratio for that selling opportunity. Okay. That also comes to the point where, if you were looking to buy this towards the upside, then I would say that take profit, if you're looking to buy here, would be before that resistance level. And if you're looking at this, your stop loss wouldn't be there. Your stop loss will be near that interim support level. Zoom in a little bit for you. You can see that this is a bit of a support level here. Right. So I would say that this is a bit of a interim support level there. So I'd say if I'm buying there, my take profit before the resistance, and then my stop loss will be just below the interim support level. Okay. So quite straightforward. Remember, stop loss beyond resistance or support level, take profit before resistance or support level. Answer your question there, Gary. Okay. Chimponda, would you advise someone to trade in a ranging market? I have a working strategy, but sometimes I like patients to wait. How do you master psychology? I want more emphasis on psychology. All right. It depends. It depends in terms of the ranging market. It depends on your trading strategy. Okay. And also what kind of range. If we're talking about a range like that, let me just draw that out. Right. If we're talking about a range like that, then I wouldn't even be looking to trade that. Okay. But if we're talking about a range like that between here and here, right, you can see it trading down and then after that trading back up again. That's a wide range. That's a wide enough range. Then I would say I would go for that wide range as well. Okay. How to approach a ranging market? I would say that you'd be looking for the safest way would be to look for the pre-existing trend and then trade that range based on the trend. What I mean by that is, if you look at the Aussie dollar here, it has been pushing towards the upside, right? It's been pushing up ever since October last year. It's been trading higher. So I wouldn't be looking to sell it down. I would sit out. I know that it's a missed opportunity as it trades down, right? I'll sit out, but I'll be looking for buying opportunities towards the upside. I'll be looking to trade it towards the upside. So that way I'm still following the trend while in a ranging market. Okay, Chimponda, I hope that answers your question about ranging markets. And in terms of patience to wait and mastering psychology, I think one good approach that I've actually advised a lot of people to do is to have a bit of a punch card system. Right? What's a punch card system? Is to actually have a piece of paper, and you limit yourself. You limit yourself every day to a maximum of, for example, 3 trades, right? Have a number of trades. It doesn't have to be 3. It can be any amount, not too big. Definitely less than 10. Okay. Maybe even less than 5. So anywhere from 2 to 5 trades, and limit yourself to those number of trades. So that way, before you enter a trade, you'd have to really consider, is this worth one of your 5 trades for the day? Is this worth one of your 5 trades for the day? That way you actually you build that patience to wait to really look for that one trade that you would have more confidence, you have more confluence before you jump into the trade. Okay, so I find that selection, being more selective of your trade, does help with building that patience. And in terms of mastering psychology, there is really no straightforward way to doing it. It's all about building that confidence, right? Very often, a lot of people have mentioned about trading with no emotions. I don't believe that anyone's going to be able to trade with no emotions. It's about trading with less emotions, understanding the process, keeping to the process. So, don't try and approach the markets with zero emotions. It's impossible, almost impossible to do that. I would say that you want to build that confidence and then trade based on the process. And also, one more point is that if you feel that you are stressing and worrying over a trade too much, most often the time you're possibly trading a little bit too big, right? You're possibly trading at a size which is a little bit too big. So something you want to check up on. Okay. Fantastic. Thanks for that, Gary and Chimponda. Okay. I love the questions, guys. Just keep it coming. Hey, Ruben, how you doing? You begin at, oh, I just shared the process on how to get started, so I hope you caught that as well. Bollinger Bands and Fibonacci retracements, I can do that. How do you determine a strong support and resistance levels and what time frame? Okay, so I'll share with you how I approach the markets, and then we'll touch on the other parts. I'll bring up one more clean chart here. Okay, so how I actually approach the markets. First off, I would always check the news, right? I'll look at Forex Factory, check the news, see what has moved the markets recently. If there is a big news event, great. For example, tomorrow we do have a lot of non-farm payroll numbers. US employment numbers going to be possibly high volatility event. So I'll be very careful about entering a trade before the news, 9:30 GMT plus 8. I'll check the news first, and then I'll look into the charts. In terms of time frame that John was asking about, my support and resistance levels, I do it on the H4 time frame. All right, I'll do my support and resistance levels on the H4. So for example, in this case, on the Kiwi dollar H4, I would have a support level at this 0.6242 level. Someone asked a question about, it's can't remember where I saw that question. Okay, but you don't want to consider support level as one line. You want to consider a support level as much as 0.6228 all the way to 0.6257. I would consider this whole area as my support level, support area. And because I consider this whole thing as my support, I'll move this to right in the middle, and then I'll have that as my support level, right? But I still would consider it as a whole area. And if we zoomed right across, you can see how price has reacted very nicely to that area as well. Okay, so first off, I'll do my support levels. I'll do my resistance levels here. And then maybe a next one up there as well. Okay, so I do my analysis on the H4 time frame in terms of support and resistance levels. I'll be looking for a trade on the H4 time frame first. If in this case, let's say, I'm right here and I can't find a trade on the H4 because price is right in the middle of the support and the resistance level, then I would go into the H1 time frame. Then I'll be looking, in this case, no trade, but I'll be looking for a trade on the H1. So I'll do H4 first, then down to H1. If I were, sitting there watching the charts closely, then I might even consider going into the M15, looking for potential breakouts of short-term consolidation areas. Okay. For most retail traders, or for all retail traders, I would say that I wouldn't go anywhere lower than the M15. For me, I look at M1 or M5 only when there's a big news event. All right. Okay. So answer your question there on support, resistance, and time frame. So when we have that, with that, then looking at Bollinger Bands, the way I use Bollinger Bands is only to tell me when it's too late to get into a trade or when it's time to get out of a trade. What I mean by that is you can see that, let's say for in this case, price breaking through that support level, you'll be anticipating to buy. What I've noticed is that when price breaks out of the Bollinger Band, right? When price breaks out of the Bollinger Band, it tends to retrace back down. Right, it tends to retrace back down. You can see several other situations here. As it breaks out, it retraces back down again. Not always, this is possibly a news event that has got strong momentum to push price towards the upside, but once it stays out and hits a resistance level, that's where we get a confluence, and then you see it come back down again. Right, you can see again, very nice one here. Price breaks out of the Bollinger Band. Next moment, it retraces back in. So it tells me when it's too late. Most of the time, a lot of traders would see a big move like that, and then you click sell right there. Once you click sell there, it retraces back up. You hit a stop loss or be in a losing position. This tells me it's too late to get into a trade. I'll wait it out until it hits and turns from maybe even the moving average lying there before selling it back down again. Okay, so that's the Bollinger Bands. It works on all time frames. You can use it, M15, even on H1 time frame. You can see that it breaks out, bounces back in. In this case, this prevents, or this saves you from a potential fake break, right? As price breaks out of a Bollinger Band, you anticipate that it's going to trace back in. So I will wait for it to come back in before looking for a buying opportunity. And in this case, a pin bar formed. We know that it's going to trade lower again. Okay, so again, another save as it breaks out of Bollinger Band before coming back in. This same thing here, broke out. Next moment, it traces back in towards the Bollinger before trading lower again, sits across before turning back up. All right. So that's quite straightforward there on the Bollinger Band. The next one about Fibonacci, you can actually be looking at it here. Oops, nope, take that away. So Fibonacci, you would go from left to right, from the lowest point to the highest point, and then you apply the Fibonacci's. You can see it acts a bit as a support, as a bit of a support and resistance level. In this case, zooming in a little bit, you can see that from this point up, right, we've drawn this towards the upside here. Okay, so it shows you that as it comes down, you can see that price retraced from the top downwards, and it's bounced 23.6 level. It hit and bounced. Once it broke that level, 38.2 again provided some level of support. 50%, very strong support level here, bounced off, and then it still traded within this range, now bouncing back up again. So the key level here is 61.8. It's come very close, but it hasn't tested that point. Okay, so quite straightforward there on the Fibonacci. I would say pay attention to those three levels in particular, 38.2, 50%, and 61.8. Okay. So far, so good, guys. If it makes sense to you all, let me know. What's your go-to trending strategy and what indicators you use? I just shared that with you, Gary. Trending scenarios, so I look for trend following strategies or trend following trades. My indicators, MACD and the Bollinger Band. All right, I'm looking. No worries, Moha. Can you explain what support and resistance level is and what it does in the charts? Okay, let's bring up another chart here. Clear it out a little bit and look at H4 time frame. Okay, so what is support and resistance levels? It's really identifying the points, right? The turning points. So I would classify it as turning points where you see price come down, hit and reverse, hit and reverse, right? So it says that in this point, this level there is a good support level, support being a floor, and then a resistance level being at about this point there, or even, at that point there being the resistance level, resistance being the roof. So it provides a bit of a, not fixed, but a bit of a constraint or boundary to help you identify potential levels that price could move towards. What we tend to find is that once we have identified these levels, price tends to, only if it breaks out of this strongly, closing above this level, then we'll see it climb to the next level. So you can identify this turning point here. So if we did draw a line right across, you can see that as we identified there, we have turning points right at this point, bit of a turning point here, and then a bit of a turning point here as well. So if price does break above this resistance level, we could see it climb up towards the next resistance level. So it goes from roof to roof or from roof to floor and floor to floor. All right, fantastic, good stuff. How many pairs would you advise someone to focus on, or in short, how many asset classes would you ever recommend a retail trader to trade? I would say that you should be looking at about 4 to 6 pairs, currency pairs at a time, right? So for myself, I look at 8 to 10, right? I have a big screen. I have all 8 pairs open up. So I'm monitoring all 8 pairs at a time, but I do know that retail traders don't have all that time to look at all those pairs, right? And also when you look at that many pairs, you need to read all the news and understand all of it together. So I'll say, start off with 2, right? Find 2 currency pairs. And it shouldn't be the same or similar ones, right? So it shouldn't be Aussie dollar and Kiwi dollar. It shouldn't be euro dollar and pound dollar. Kind of think of it as maybe an Aussie dollar and a euro dollar, or a Kiwi dollar and a pound dollar. So you get a good mix of market open timings. And then once you get familiar with those pairs, you can add 1 or 2 more after that. So, try and have about 4. I think that's a reasonable amount. Fits on the screen nicely as well. Then you can focus on that 4 to try and take advantage of the moves. Okay. How do you maintain a healthy trading psychology after losing, let's say, more than 2 consecutive trades? Very straightforward. The first thing to do, stop trading, right? If you hit 2 consecutive trades, straight away, turn off MT4, turn off everything, stop trading, go do something non-trading related. Go clear your mind, because if you sit there and go, oh, I've just hit 2 stop losses, right now I need to chase it back, I need to make it back, most likely you're going to hit the 3rd stop loss, right? You're going to be rushing to trade, you're going to be guessing and trying to revenge trade it. So first thing, stop trading right away. And then after that, you can always, reach out, test it, back test your strategy again, right? So after you're taking a break, back test your strategy again, just so that you understand it, have that process tied down and understood, then look back into it and start off and just have the understanding to start off fresh, right? Forget about the two trades, start off again with the same process, going, okay, now it's almost clean slate, brand new, what to do again. I hope that helps. I hope that helps you, promise. Okay, so walk away, take a break, then review the strategy and the process. And then after that, when you start trading, forget about what happened before, start off as if it's a brand new slate. John asks, what trading sessions do you recommend with high volatility? Well, definitely the US, definitely the crossover period between between London and the US session. So in terms of GMT plus 8, I would say is the 8 to 9 p.m. GMT plus 8. So that's when US is open. Show it to you here. So you see that a lot of news happens at about 9 to 10 o'clock. So 8, 9, 10 o'clock, GMT plus 8 would be the best high volatility, high liquidity periods to be trading. You got to convert that to your own time zone, but that's when we have US markets being open, and we can see that liquidity being increased. Okay, so you can also, if you use Forex Factory, you can scroll down and you can actually check out the session timing. So you can see right now we are having London being open, US not opened yet. So when we come to 9 p.m. GMT plus 8, we'll have the crossover between London and the US. That's when we're going to see volatility and liquidity being higher. Any advice on currency pairs to start off with? My own currency is fairly weak in their money already. I would say that currency pairs to start with. What's the time zone in? Sorry, I'm just going to check this. Current time in South Africa. So it's 12:47 p.m. I would say that I would say that the pound dollar would be a good one to be looking at, because you notice if you start trading onto this or start monitoring this, you might be looking at better liquidity on the pound dollar as within your reasonable time frame, right? So I wouldn't say I wouldn't recommend Aussie dollar or the Kiwi dollar, because that would be really early in the morning for you guys. Then you wouldn't want to be trading during that time as well. So pound dollar, euro dollar, pound dollar, maybe even a US CAD, if you're looking to trade later into the day, that'd be a good pairs to start off with. All right there, Mahal. Good stuff. Thank you all for the questions. I hope you have found it good information, useful and good information for you guys. Any other questions? How many trades do you think are more than enough for one day? Okay, so very good question. Personally, for me, I average about 2 to 3 trades a day. My average, and I've been trading for many years now. It's about 2 to 3 trades a day. But that said, remember it's an average, so it could be days where I have 0 trades. I have no trade at all. Market's not moving, or I just can't seem to make sense of what's happening in the market, so I wouldn't enter a trade. But there are days where we would have a lot of trades just because it's a high volatility news event, right? And markets are trending strongly in a certain direction. Then I would have more trading opportunities. I'll be entering into more trades. So what I find is that on average, about 2 to 3 trades would be fair. All right. You're most welcome there, Mohal. Any further questions? Time has really flown. I've been enjoying the session. Time has really flown. So are DBBs similar to BBs? I'm not sure what DBBs are. I'm not sure what DBBs are. So you want to elaborate on that? Okay, double Bollinger Bands. Okay, so how I have my Bollinger Bands. Let me just clear it out. I have my Bollinger Bands like that. One other thing I've done with Bollinger Bands is, I'm not sure if it's the same one that you're talking about, is that I have the 2 standard deviation and also I have the 1 standard deviation Bollinger Bands. Is that the double ones that you're talking about? So why I have the 1 and 2 standard deviations is because what I tend to notice is that if price trades, possibly not so much here. Let me find a seat. Okay, there you go. So if price trades within if price trades within the 1 and 2 standard deviation within the Bollinger Bands, it becomes a bit of a trending scenario. So that's the only reason why I would have the 1 and 2 standard deviation on my Bollinger Bands, just to identify that trending scenario in terms of Bollinger Bands. But a lot of people have said that it does make it a little bit messy in terms of the charts. So, you could even just deal with one single, the 2 standard deviation Bollinger Bands. Yeah, it does. And when you have 8 charts open, imagine looking at it like, imagine looking at it like that with double Bollinger Bands all over. It's just going to be super messy and almost impossible to pay attention to. Okay. I take profit quickly and delay to close my losses. What do I do? What time frame do you do it on, John? One way you could try is going to make you go slightly crazy, but one way you could try is to enter a trade and walk away. Have your stop loss set, have your take profit set, and walk away. Go do something else. Come back in an hour, or in 15 minutes, or an hour's time, check it, and then if it's hit take profit or stop loss, great. If it's still sitting in the middle, reevaluate. Is there a reason why you want to close out the trade? Find the reason why you want to close the trade. If there is, go for it. If not, walk away again, come back again. All right, I hope that helps. I do that as well. I enter a trade and I go work on something else. I don't pay attention to the charts, and then I'll reevaluate once in a while. I have a community of over 10,000 users. I want to because information I have gotten is too. What risk percentage would you recommend on a $500 account and reward? Risk, in terms of risk, maximum risk per trade should be at 2%. Maximum risk per trade should be at about 2%. What I would say is that just be extra careful about that number, because if you have 1 trade open, it can be 2%. But if you have 2 trades open, then your maximum risk per trade should be 1%, right? Because your maximum exposure should be 2%, right? Because the common saying is 2% per trade, but then you see people entering multiple trades, and then it's all 2% over and over again. That's going to be super dangerous. I would say is that your maximum exposure should be 2%. Always struggle to know when to let profits run and exit. I'll answer that question already, Gary. Okay. Chimpona newbies participate. Great. Good stuff. All right. A tour, I'm pretty sure it's recorded. Reach out to the guys at IronFX. I'm pretty sure they can direct you to where to get a copy of this session. I'm glad you guys are all finding this useful. We're heading towards the end of the session, so let me know if you have any last questions. Any final questions? Just remember that we do have US non-farm payrolls tomorrow, so just be extra careful on that. Any news strategy? I think you mean news trading strategies. I would say that most retail traders should stay away from news trading strategies for now, because what traders tend to do is try and rush into a trade when you have a news release. That's possibly going to cause you more heartache and more problems as you try to rush into that. So just be extra careful there. What you guys can do, I would suggest, is that you can reach out to me if you want to find out more. If you want to find out more, you can reach out to me here. You can jump onto TradingView. Reach out to me there, drop me a message. If you have any questions, any further questions, I'll be happy to help you with that as well. I do some analysis about, where prices are heading, looking at fundamentals, how to trade the news, how to a bit of a review of what happened last year. So it's all there, giving you analysis, trade ideas, psychology, and all that. What do you think about the market for the next few weeks or months as recession is inevitable and heading towards the market? That's a good last question, but that's a big last question. I think that recession is inevitable and it's possibly slightly priced in already. So I think it is going to be a good market for traders. Volatility is going to be high, a lot of opportunities to be had. I would approach the markets with a possibly shorter term view on trades, right? So whatever trades I get into within the day, intraday trades, or within the next couple of days, I'll close it out, just because it has been very choppy price action. So I wouldn't be holding on to trades for too long, right? So an example here, you can see on the Aussie dollar, you can see that just get that out. Okay, you can see that just on Tuesday, so 2-3 days ago, it shot straight down towards that 6697 or 67 level, and then almost immediately it bounced straight up towards 6880, right? So very high volatility situations or choppy price actions on the Aussie dollar, and actually right across the board. So I would say, short-term trades. If, for example, you look to sell and you thought that it was going to go all the way down, you'll be caught out as it bounces back up again. So short-term trade downwards and then back up again, or look for that trending scenario. Okay, Ruthik. With that said, I hope you guys have enjoyed the session. Hope you found it very good and informative. If you have, please let me know. I do appreciate the feedback. And do remember, we have news ahead. We have possibly recession ahead. Choppy and volatile price action coming into the markets. Please trade well, trade safe, and I look forward to seeing you at the next webinar again. With that said, take care now, and I'll end the session. You're most welcome, everyone. Thanks, Gary. Thanks, John. The link is there, Ruthik. You can reach out to me at this point, drop me a message and I'll be happy to have a chat. Take care now. Bye bye.